Good morning and welcome to our Repo and Collateral panel. I'm Alex Westphal. I'm the Secretary of our European Repo and Collateral Council, the ERCC, and I'm very pleased to be joined today by both chairs of the ERCC. So let me introduce Gareth Allen, Global Head of Investment and Execution in Group Treasury at UBS, now in his second year as chair of the ERCC and also ICMA board member. And Emma Cooper, Head of Fixed Income Repo Trading EMEA Financing at BlackRock and Vice Chair of the ERCC, I think also now in her second year of office. So we have 10 minutes today to touch on some of the key priorities that we're dealing with at the ERCC. But before we do that, let me start by asking you, Gareth. The past 12 to 18 months have obviously been a very unusual period for all of us. So looking back, how did you see the ERCC evolve over that time? And do you think there are any lessons learned for us?
Yeah, I agree, Alex. It's been a very strange time. I think the ERCC and the ICMA, like most other institutions, went remote. I'm sure we'll see a mix going forwards as well of working in flexible locations, depending on the types of roles and regulatory support for flexible working. On the topic of things like ERCC participation and events, I think it's been much easier to organise the larger scale workshops at shorter notice. It's made us more agile, easier to be more inclusive going forwards. I see us using that mixed media to connect with each other in the coming years on topics of interest for ERCC members. But I am looking forward to a time when we can all see each other again in person, right? And finally shake hands when the world is in a much better place.
Definitely, I'd certainly agree. So with that, let's turn to the ERCC priorities. One thing that clearly hasn't changed, regulation continues to be an important issue for us. We've seen the go live of SFTR reporting last year in the EU and the UK, and obviously the EU's CSD regulation continues to keep us very busy. Emma, from your perspective, what have been the big challenges in terms of regulation over the past year, but perhaps also looking ahead?
So yeah, thank you for having me here. Look, SFTR was a clear focus for all of us as an industry last year. I think we can all agree with the amount of efforts we all put into this regulation, which overall I think has been successfully implemented. The ICMA has done a great job in coordinating these work streams to ensure its success. This, of course, is going to be an ongoing consideration for all workflows in the future. But yeah, looking ahead to the next regulation, CSDR, which is clearly a big focus for the market. It's really challenging to implement without having clear guidelines, and it does really make it hard to define these workflows and predict outcomes. When it comes to mandatory buy-ins, market participants currently don't have robust workflows or the infrastructure around buy-ins, and especially if we're going to handle larger volumes than normal. In saying this though, there's been a lot of really good work and focus from the industry as a whole, just to reduce fails in the market and improve efficiencies ahead of this regulation. The operations committee has certainly done a great job to just try to focus on improving some settlement efficiency within the market.
Yeah, and Gareth, there's clearly a close link here to our extensive work on industry best practices. Can I ask you to say a word about that and what we've been doing in this important area?
Yeah, absolutely, Alex. Look, the secured funding community came together in really great numbers to come up with the SFTR recommendations, which can be downloaded from the ICMA website. We had huge participation through the whole value chain, and the output there is an extremely valuable resource for the industry. Then if we turn to CSDR again, the debates have been intense, the concerns are well known. In parallel, the ERC community have been working hard on the settlement efficiency topics, as Emma said, having recently agreed best practice recommendations for mandatory partialing and shaping in the Euro government bond markets to improve settlement efficiency rates. We've got workshops currently underway on how best to technically implement that across the industry, just recognizing the many challenges we're going to have from the buy to sell side, but very exciting piece of work.
Good. Let's move on to the next big topic, one that has emerged more recently, but which will surely stay with us, the rise of sustainable finance and what this means from a repo perspective. So in April, we achieved quite a milestone with the publication of our first ERCC consultation paper on the topic, and we did receive some very good feedback. So Emma, what's your view? How do you see the role of repo in sustainable finance, and what's next for us from an ERCC perspective?
Yeah, look, from a client perspective, what I do know is the landscape for both green and sustainable investing is evolving, and the demand is growing for our clients, and really how they apply an ESG lens to their investment profile. I think it's going to be important to think about, how we define this in repo and collateral markets, and whether it is through best practices, defining the standardization and definitions, to just ongoing monitoring of regulation around this. I think it's going to be really interesting to look at the results of the consultation, and I'm really looking forward to just diving a little bit deeper into this with the committee. But yeah, look, the repo market plays an important role in providing liquidity and financing to help support this growth.
I would echo here as well. This is a really exciting topic for the ERCC to be discussing, just how it might impact secured funding. So ESG is on everyone's minds, and all of the market will be impacted by the changing sentiment from investors and financial institutions, and just to really make a tangible improvement to the world.
Good. Then finally, we should also briefly mention another big cross-cutting theme, the importance of fintech and electronification in the repo market. So Gareth, can I ask you to share your views on the importance of electronification, and also to say a few words perhaps about our ongoing work to develop a common domain model or CDM for repo, and why this is important?
Yeah, sure, Alex. I think I've been saying for a long time that the secured funding markets have a long way to go on the technology and the efficiency front. I think there's a natural evolution I see accelerating, especially with all the new and also not so new technologies out there like DLT or cloud. I see the market continuing to become digitized throughout the whole value chain, from the end client to the banks, to the intermediaries, to the central banks even. Low touch trading driven by more quantitative brains on desks across the world. Now the CDM work, that's exciting because it sets a technological standard that can be applied to this whole value chain. It will make future technology implementations easier, simpler, cheaper. And it's just great to see the engagement we've had from members in the work to build on the CDM model and enhance it for secured financing.
Indeed. With that, I'm afraid we'll have to come to the end already. So thank you very much, Emma and Gareth, for sharing your thoughts, and of course to everyone for listening.
Great, thanks for having us.
Thank you.